Michael Dell goes private and China catches gold fever. Hello fellow traders, Adam Hewison here, president of iknow.com and co-creator of MarketClub with your video market update for Tuesday the 5th of February. Well, the big news is, Michael Dell goes private for $24.4 billion. And we'll see how that works out. He's been, it's really getting very competitive in the smart tablet and smartphone market. And I think we'll see how he fares. But I think sooner or later we'll see this. In a few years we'll see this come back into the public's domain once they try to float some stock. So let's see what happens. But China gets gold fever. Let's see what that happens. Gold's about unchanged for the day. It's had we've been over the 1681 level, and we've pull back from those highs, but I want to show you why that's happening, and we'll be doing that. Plus, we'll be covering Computer Science Corp, Estee Lauder, Archer Daniels, and McGraw-Hill companies that got really beat up with the Department of Justice today, Life Science Corp, and finally Diamond Offshore Drilling. So let's get started. Go right to our portfolio. Let's start with gold because that's the big news today out of China. The record imports from Hong Kong, and this is what I want to show you because this is incredibly powerful. First of all, I'm just going to draw on the screen like I normally do, but here we are, we have this market moving up like this, and then we're seeing this correction like this, okay? This is the correction that really is superbly important because this is going to be probably, I'm guessing, the low for gold this year. And we're 1640, so you just mark that down as a close only on the London gold. 1640. Excuse me. We have a little bit of a divergence here, not much, but a little bit of a divergence. But also, if we see this market, the market got right up to here today, backed off down to where it's currently trading around the 1673 level. If we see a close over this trend line, this is a very important trend line. And why it's so important is because once we go through there, this market's going to go higher regardless. And I'm very confident, I'm very confident in saying that. And the reason I'm confident is because this is a very similar picture to what happened in crude oil. So let me just clear the screen and show you. But remember this picture. Here's the base, here's the correction, and boom, we're off. So let's just go to crude oil. This would be approximately a trend line coming from October, November, December, January, February, maybe a 5 or 6 month trend line. So the longer the trend line, the more powerful the move. So let's just go back to our portfolio and take a look at crude oil. So here we are. And when we get back, I'll show you something as well. So let's just scope this out and look at the similarities here in my mind. So here we are, we take our trend line right here, drag it down, we've got 3 parts, boom. You can see we just broke through based on our, hold on, let me just get this right. Yeah, there were 3 parts and we broke through. And you can see basically that's where the monthly trade triangle kicked in. So you can see we went from 94 all the way up to 98. Nice move, percentage-wise, leverage-wise, excellent, excellent move. But you have the same type of pattern. You have the sort of correction, and then you have the 3 points right here. And then you have the breakthrough right here to the upside. So watch gold very carefully because this is the formation we had with this. It's kind of like a wedge getting tighter and tighter and tighter. The fact that it's broken up tells me the market's going to go higher. Same thing with gold. Watch the 1680 level. We go over there. It's going to be positive. Again, look at the triangles. The monthly and the weekly still positive. Only the daily is a little bit negative right now, but we do expect that to turn. So let's scope that out. Go to our portfolio, and let's take a look at some of the other markets we want to cover today. So let's look at the euro. Euro sort of a little bit of a mixed picture there. It's still in a bull trend. You can see how both of our trade triangles are green, the monthly and the weekly, and it's just sort of at a halting stage or a resting stage, so to speak, because it has had a big move and it is expected to go higher because you've got a nice base here. We talked about energy fields, bases, and everything else. These are terms we use, but the reality is, this is the base right here. This is what we call an energy field, and no pun intended because this is crude oil, but this is capable of taking this market much higher on the euro. So if you're looking to say the 122 level to the 132, we could be up towards the 142, 144 level, which dovetails very nicely with these previous highs set back in the April period of 2011. So let's see how this plays out. And let's just clear the screen and go to our next market. So lots of opportunities. I still think in the euro, which means the dollar's going to get weaker, which means gold's probably going to go higher because gold just reflects that as well. So here we are. This is the S&P 500. I'm going to put a candlestick chart in. I like candlestick charts. Let's scope this out to 6 months. Now remember, we had a big down day yesterday. It's being reversed today. Just tells you there's a lot of people who want to be long stocks. And again, we talked about these energy fields, and here you have a 1, 2. Just look at this base right here, right there. There's the base. So this is capable of carrying this market from, we said, from 1360 up to 1460, up to 1560 to 1600. That's our target zone for the S&P 500. And again, you can see on our monthly trade triangles are positive, very bullish, weekly positive, very bullish. So we expect this market to do better in the future. So let's just clear the screen, go back to our next market. And we're going to be looking at the Dow. Much the same picture with the Dow. Excuse me, my throat is sort of clogged today. Much the same picture with the Dow. We're just flirting with the 14,000 level, very close. I would not be surprised to see it close over that level today or tomorrow. But generally speaking, these are two big days. I think yesterday was because of the AFC. The Ravens won. That's why the market was down, in my opinion. But I think that's all being sort of dusted away, and we're looking at this market on what the merits are. People want to see stocks go higher. Interest rates, they can't make any money in interest rates, so they want to go into stocks because at least there is some return there. So let's go to our next market, the Nasdaq. Pretty much the same picture, not quite as bullish. You can see we haven't gotten over the highs we saw last September. So we're just sort of flirting around there. And of course, today we're up because of the Dell going private, and the tech sector is a little bit stronger. But nonetheless, it's still not as strong a picture as the Dow or the S&P 500, which I think is a much better correlation with the overall markets in general. So let's just go back to our screen, see what else we have here. There's computer sciences, obviously a big move today. And I think we're going to see this market just do better. It's a great move. It's a clear breakaway move. If we put our, you can see our weekly came in right here at 32.59, and we have to go back a ways. Let's just get maybe about a year out. And you can see we picked up our monthly all the way back here, and it's really done extremely well from that point. So this is back in August of last year. We had a major buy signal, and you can see it pretty stayed in place up until here, and that's where we got a signal to basically exit the long. So you basically buy on the monthly right here, 28.50. You're out here at 31.76. So you made $3 over 10% on your money just in a very short period of time, a couple of months, and you're back in right here. You don't go short, you just get out. So you're back in here at 32.59. We're currently trading at 46. I would say $14 is almost a 50% return since November. I think that's incredibly good, and this is how trade triangles work. And I'll just scroll this out for you. If you're looking at the trade triangles to trade them, it's very simple. Here's a monthly. Right here. This was a trend change, okay? I'll show you how this works. This is a trend change. The trend was down, and now it turned up. So you're looking for a monthly green. That's the monthly green right there. You exit right here on a red weekly, okay? A red weekly, and that's an exit. Don't go short, just exit. Take profits, basically. You re-enter only when you see another green weekly trade triangle. Because remember, the monthly trade triangle is still in place, trading with a trend. So you re-enter a long position here, okay, with a weekly. And that we see as 32.59, currently trading at 46.45. Excellent trade. Nice profits in that. So, and you would have seen that, and I'll show you how you would have found that before. So let's go to our next market. And the next market we're looking at is going to be Estee Lauder. Yes, the beauty company. And you can see they're popped up today. 64 09 last. This is a nice formation, and you want to look for if you see a close over 66, and this is again a nice energy field that's building and building. Here's what we're looking at. This is a really nice energy field. This is the line of like demarcation, and this is a 66 and a 65. So it closes over 65, takes you over this level, and this market's going to really look good. So on some technical levels, this looks good, and we're expecting this market to trade from, let's say, the 50 level right here. This is where the lows were, 50, to the highs, which were 64. So 50 to 64, it's 14 added to 64. So 64 plus 14 gives you 78. That's our target zone for Estee Lauder, 78. So if you clear everything off the screen and go back, and again, you saw the weekly, we kicked in today 64.61 on the weekly as a buyer. So you should be buying Estee Lauder based on our formula to be trading. So let's just scope this out and let's see what the max is. You see it's a nice trend coming up in Estee Lauder. So this is a continuation pattern to, I think, the 78 level. So let's go to our next market. This is ADM, Archer Daniels Midland, a big producer of soybeans and processor. We had a signal today. I'll just put that in. Boom. And there we have it. Estee Lauder going higher. There's the monthly. And, excuse me, it's a big mover today, but we didn't have a signal today. It was a big mover, but you can see how we got the signal. And if we scope this out some more, and this is the thing we want to look at perhaps, is let's put a close only on and get rid of all the triangles. And let's draw a trend line in here, and I don't think we're going to get a trend. Oh, that's good. So there's the key trend line in my mind. We'd have to get this market over 30, which is not that difficult. Once it gets over 30, we'll be breaking that trend line since really early 2011 on the upside. So I think that will be a very positive sign. It will probably mean inflation is coming back in the terms of to our next market, and that's going to be McGraw-Hill. Now, McGraw-Hill is getting slapped really hard by the Department of Justice for their sloppy or their work on valuing a number of securities, and this is obviously a big move down. Yesterday and today, they lost a huge amount of value. That's from a new high, and of course, that was very difficult to predict. That came out of the blue, but you can see we did get a weekly exit signal on this market at 56.81. And here we are, we're currently trading at 47. So you would have actually got out $10 higher, which I think you would agree, excuse me, 53, $6 higher, I think we agree is not a bad exit strategy at all. So I think for the most part, this looks as though the market's in a minus 100. We expect this market to deteriorate. That's right, deteriorate in the weeks and months ahead. So moving right along, EW, Edward Life Sciences. This is another one that's under pressure. We had a signal today at 89.62, currently trading at 87.94, and it looks like it wants to go lower. Let's just scope that in just a little bit. So there you can see the signal very clearly, and it looks like it's set up to go down to perhaps test the 82 level, at least in the very short term. Now, the last market we're looking at is Diamond Offshore Drilling, symbol DO. That took a big hit today. But again, longer term, this is a bull market. Now, here's what I mean. You had a pullback, and you see how it got down here, whoop, rushed right back. So I think if you are not in this market, the original buy point was 70.25. It's 73.68. You could probably buy this market, but you may want to give it a few more days before that happens. But let me show you how something very cool with MarketClub. This is where you can really, under the trade triangles, you can search equities, foreign exchange, futures, mutual funds, ETFs, penny stocks, Australian stocks, Canadian stocks, practically everything you want to look at. And so I want to look at equities for over 2 million shares that trade over 2 million. I want to see monthly trade triangles, and I want to search today. So what happens? You can see this very clearly. If you look at this last column right here, that's the monthly right here. Oops, I better put an arrow the right way. And that's the monthly trade triangle, okay? So the reality is when this is green or red, it tells you that's a new signal today, especially when it's being highlighted. So you see basically a square and you see a red triangle like that, and then you see sort of a yellow, you see sort of a yellow background right here. It just tells you that's a new signal today on the downside, okay? So the reverse is, of course, when you get the upside, and that is right here when you see these arrows like here. So if you look at the stock here, I'm going to pass that one because it's too inexpensive, but you look at Activision Blizzard right here, that's a signal. And you look at all these other stocks, Coca-Cola is a signal today, and TJX company is a signal, and so on and so forth. You get the picture. But what you can do, and I'll clear the screen, is look at this very quickly, and you can see how powerful these triangles are and how you can tell. So you just have to mouse over, and it tells you exactly what. See, the red monthly, 6.19, that's today, 0205. So it tells you all the signals you get. Just mouse over, it tells you very quickly. Green monthly, 5724, that's today, and it tells you when you should be getting in. So it's very powerful like that. Hey, we've covered a lot of ground today, taken a lot of time. I hope you've enjoyed this little update on the major markets and the major movers. I'm Adam Hewison for Market Club. I'll be back tomorrow, so have a great trading day.